Hi guys, I'm Dan and this is Kai. We're the directors at Crescent Mortgages, bringing you more FAMQs, frequently asked mortgage questions. Today we're going to be covering using employed variable income such as bonus, commission and overtime on a mortgage application. Before we get started, we are mortgage and protection experts.
Experts
Why not? With a combined 20 years experience in the industry, CMAP qualified. So we do know what we're talking about, and let's jump into it. Thanks a lot. So, commission, bonus and overtime, they'll normally be paid either monthly or annual. There are some that can pay, some employees that may pay quarterly or biannually, but generally they'll be paid monthly or annually. Now, overtime and commission are 9 times out of 10, they're going to be paid monthly. Bonus, it is quite common for them to be paid annually. A lot of people might get a Christmas bonus or a bonus at the end of the financial year every year. With an annual bonus, most lenders will be looking at the last 2 years annual bonus that you've received, and they will normally take an average, or if it's dropped down in the most recent year, they may just go on the most recent year. In terms of the percentage, so with an annual bonus, it's most common that they will use around 50% of the average of the last couple of years. Normally not 100%. There are a couple of lenders that can take 100%, but more often than not, it's going to be 50%. But again, if you're trying to borrow as much as possible, have the conversation with your broker, because if you do need to use 100%, there may be a few specific lenders that they can look at to help you borrow as much as possible. As far as monthly goes then?
Yeah, monthly is much more common. As Dan said, you'll get overtime, commission and bonus monthly. I think it's important that the payslips are the same each month, and what I mean by that is they are all bonus every month or overtime every month. You couldn't have bonus in January, commission in February and overtime in March.
It would be a little bit inconsistent.
It doesn't quite work. They have to be labelled as the same thing for starters. And most lenders here will take a 3-month average, although some might go 6-month average, some may look at year to date. 3 month is quite common. And again, percentage wise, the default for a lot of lenders is about 50%.
In terms of the amount?
In terms of the amount they can take,
Yeah.
But that said, there are lenders that take 100%. So they'll take all of the commission, bonus or overtime, and they will take that 3-month average. So again, if you're maxing out affordability, you maybe have to pick and choose your lenders correctly there.
Yeah, I think the main thing to mention is that at the point that you apply for the mortgage, if you are using some bonus commission, a monthly bonus commission or overtime on the application, the lender is generally going to look at the most recent 3 months or 6 months pay slips to work out what your average annual bonus, overtime or commission is. So if you're applying for the mortgage, coming off the back of maybe 3 decent months as far as your bonus goes, then you're potentially going to be able to borrow more than if you're coming off the back of maybe 3 slightly lower months. So if you approach a mortgage broker and you tell them how much you've earned, show them your pay slips, and they confirm that you can borrow X amount, but then it takes you 2 or 3 months to find a property, at that point, the amount that you can borrow may have changed if your most recent 3 pay slips are higher or lower than when you originally spoke to the broker. So I think if you do receive kind of flexible income that does change, you want to maybe stay in contact with your broker throughout the process, updating them as and when you get a new pay slip, because again, that could make quite a big difference to how much you can borrow.
Yeah, every month or so. I think the other thing that we briefly mentioned, this is just, there are other monthly allowances I'm sure that you get, but often if they're guaranteed, lenders take those, shift allowance maybe, or things like that some people have. They're normally guaranteed, aren't they?
Or car allowance,
things like that aren't normally too bad. That's all taken. Again,
that's basic, really.
Yeah, can vary a little bit. So if you do have extra income, maybe check in. But those are the 3 main ones that vary. And
I think the main thing really is if you do speak to a mortgage broker or your bank and you give them information about how much you're earning when you're trying to find out how much you can borrow, don't just, if they ask what you earn in a year, and you've got a £30,000 salary and £20,000 you made in overtime in the last year, don't just tell them your salary is £50,000. They're going to need to know the breakdown, because like we say, not every lender will take 100% of those additional earnings, and you could find yourself in a situation where they've done the assessment based on all of that being a guaranteed basic salary, and when it comes to finding a mortgage, you may not be able to borrow as much because they weren't aware that some of it was a non-guaranteed income. It's a really straightforward topic, really. Again, even though we've kind of told you that a lot of lenders will take a smaller percentage, it really is possible to use 100%, providing you've got the track record. But just make sure that you give the details or provide your payslips to your bank or to your broker so they can actually run the accurate affordability assessment for you. As always, any questions, just give us a call or leave a message in the comments, and we'll see you next time. Thanks a lot.